What would happen if major oil producers decided to cut their production? Have you ever considered the ripple effects of such an event? Picture this. Russia and the OPEC Plus group, which comprises some of the world's leading oil producers, are continually trimming their oil production. The oil and gas industry is a global game, with every decision echoing across the world economy. This power play in oil production isn't just a matter of numbers on a spreadsheet, it's about the delicate balance of global energy supply and demand. When major players like Russia and the OPEC Plus group decide to cut production, it sends ripples around the world. It affects everything from the price at the pump to the political dynamics between oil-producing nations and those who rely on their exports. These recent events are part of a larger narrative. In 2020, Russian oil production fell for the first time since 2008, and it was no accident. It was part of a global deal to cut output in response to a pandemic-induced slump in demand. Now, the OPEC Plus group is expected to release an additional 500,000 barrels per day into the market, a move supported by Russia. This decision is not an isolated event, but a result of a series of developments. Let's delve into the past to understand the sequence of events. In 2020, a significant event occurred. Russian annual oil output fell for the first time since 2008. Let's talk about this pivotal moment in global oil production. A decade of steady oil output came to a halt in Russia, with the nation witnessing its lowest oil production level since 2011. In fact, oil and gas condensate output took quite a plunge, dropping to 10.27 million barrels per day from the previous year's 11.25 million barrels. So why this sudden dip? Two major factors were at play here. The first was an international agreement to cut oil output. In April of 2020, Russia, along with other leading oil producers, agreed to an OPEC Plus deal to reduce its oil production by over 2 million barrels per day. This decision was a collective effort to stabilize the oil market amidst fluctuating demand and supply dynamics. The second cause behind this reduction was the COVID-19 pandemic. The global health crisis brought about sluggish demand as countries went into lockdown, travel came to a standstill, and economies slowed down. This unprecedented situation led to a further dip in Russia's oil output, but it didn't end there. The OPEC Plus group, which Russia is a part of, decided to gradually reduce the cuts. In January, they released an additional 500,000 barrels per day into the market. Russian Deputy Prime Minister Alexander Novak even stated that Russia would support a further increase of the group's output by another 500,000 barrels per day, starting in February. Analysts now believe that the oil market is in a better shape than before, thanks to the OPEC Plus actions and the start of COVID-19 vaccinations in many countries. But this was just the beginning. The subsequent actions taken by OPEC Plus took the global market by surprise. In the wake of Russia's decreased production, OPEC Plus embarked on a strategic move. This coalition of oil-producing nations, including the likes of Saudi Arabia, Iran, and Iraq, among others, decided on a game plan that would see a gradual reduction in the cuts they had initially implemented. The aim was clear: to slowly release an additional 500,000 barrels per day into the market. This was a calculated step, designed to balance supply and demand while also ensuring the stability of oil prices. It was a move that showcased the group's ability to adapt to changing market conditions, while demonstrating their commitment to maintaining a steady flow of oil to the global market. In the midst of these developments, an important statement emerged from Russia. Russian Deputy Prime Minister Alexander Novak made it clear that Russia was on board with this plan. He expressed Russia's support for a gradual increase in the group's output, aligning with OPEC's strategy and further solidifying their united front. This was an important endorsement, as Russia, being one of the world's largest oil producers, held significant sway within the group. Novak's statement underlined Russia's commitment to the collective cause, reinforcing the unity and strength of OPEC Plus in the face of fluctuating global oil demands. However, while these strategic moves were being made, the market was showing signs of recovery. Analysts began to observe that the market was in better shape, with a deficit of around 3 million barrels per day becoming apparent. This was a positive sign, a light at the end of the tunnel, if you will. But as promising as these signs were, the actions of OPEC Plus had just begun. In 2022, amidst criticism from the United States, Russian President Vladimir Putin made a significant statement. Putin declared that Russia was not working against anyone in the energy markets. This statement came as a response to the backlash from the United States regarding OPEC Plus' decision to significantly reduce oil production. The statement carries substantial weight given the context of the situation. Russia, along with other leading oil producers and OPEC, had been cutting oil production in response to the pandemic and a global deal to curb output. This had led to a decline in Russian oil production for the first time since 2008, which had a profound effect on the global oil market. Putin's statement, in essence, was a rebuttal to the criticism that Russia and OPEC were deliberately manipulating oil production to resist the United States. He maintained that Russia's actions were not antagonistic, but rather a response to the current global situation. This move, he argued, was not intended to work against anyone, but to stabilize the energy markets in the light of the pandemic and the subsequent drop in demand. This statement, however, didn't quite quell the criticism. The United States, among others, continued to express concern over the reduction in oil production, arguing that it had far-reaching implications for the global economy. The implications of Putin's statement and the OPEC Plus decision are vast. They touch on issues of power, geopolitics, and economic stability. They question the balance of power in the global energy markets and the role of major oil producers like Russia in shaping that balance. The stage was set for a complex interplay of power, politics, and economics. This narrative continues to unfold, with the world watching closely as decisions made by Russia and OPEC Plus continue to reverberate through global energy markets. The decisions made by Russia and OPEC Plus have far-reaching consequences. As they continue to reduce oil production, the ripples are felt far beyond the oil fields of Russia and the member countries of OPEC Plus. The world's energy markets are inextricably linked, and when one major player changes its strategy, the effects reverberate globally. The immediate consequence of these decisions is a change in oil prices. With less oil being produced, demand begins to outstrip supply. This imbalance can cause oil prices to increase, impacting everything from the cost of fuel at the pump to the price of goods and services that rely on oil for production and transportation. The market's reaction to these changes has been mixed. While some analysts believe the situation is stabilizing, others warn of potential volatility, particularly if demand surges unexpectedly or if further production cuts are implemented. Future speculations about oil prices and production are varied. Some experts predict that the reduced production could lead to a prolonged period of higher oil prices. Others, however, speculate that the production cuts may eventually reverse as Russia and OPEC Plus seek to regain market share. This could potentially lead to a period of lower prices as supply once again begins to outpace demand. The role of the United States in this scenario cannot be understated. As one of the world's largest oil producers and consumers, the US has a significant influence on global oil markets. The decisions made by Russia and OPEC Plus are in part a response to the US's energy policies and production levels. This adds another layer of complexity to the situation, with potential geopolitical implications. Beyond the immediate effects on oil prices and market stability, these production cuts could also influence the global shift towards renewable energy. If oil prices remain high, it may incentivize further investment in renewable energy sources, potentially accelerating the transition away from fossil fuels. As we continue to monitor this evolving situation, one thing is clear: the decisions made today will shape the energy markets of tomorrow. Whether that leads to a period of higher prices, increased market volatility, or an accelerated shift towards renewable energy remains to be seen. What is certain, however, is that the actions of Russia and OPEC Plus will continue to have a significant impact on the global energy landscape for years to come.